Welcome to TradeTheMBI.com. This is John. This report is for the 23rd of July. Continuing the press forward. ES making new highs, NASDAQ getting close to them. We've been in this continuation from the power mo signal that took place back over here. Just riding the Fibonacci lines. We've been fighting between the 76 and 100% this entire way. On the latest breakout to new highs, the ABM now is split between the two, which is helpful because it gives that middle range, sort of like we had right here. Above, you can be long; below, you can fight with it back and forth. But ultimately, at 32.75, we're headed towards that 4,000 projection I made back down in the back over here when we were in the low 2,000 range. So nothing is out of the ordinary with our expectations. We're still going to bounce back and forth. The ranges intraday still are fantastic. Ideal, and we keep going between positive extreme algo levels that are established, as well as here's the NASDAQ. It's near the 100% range, but it's achieving more of a balance between the broader S&P 500, and that's a healthy thing because when you have one that's out of whack with the other, it tends to distort things. So it's all good to see that. Euro, of course, because of the consistency of their open versus the U.S. still being back and forth, has continued to rise. It also helps the U.S. from a trade standpoint, and since the U.S. Fed is bolstering the EU anyway, this is what the Fed wants, and they get what they want. No question about it. And again, oil just riding that smooth line to the upside, still poised for potential move forward, but again, in the U.S. you had a little bit more of a build simply because of the some areas locking back down or restricting activity. But the preparation and gold, some of this preparation for gold is a lot of what's really not being reported a whole lot. You've got a whole lot of activity taking place with Turkey. Their involvement now moving into Libya. Egypt is going to be putting in forces there. You have rumblings in Armenia, Azerbaijan. Russia's involved in a lot of those. So there's still some unstable portions that are starting to get more active. And I think that's also a secondary consideration that's taking place, that things could get more volatile worldwide rather quickly. And that escalation would certainly, beyond just the massive amount of money print across the world, accelerate things. So you also have the added China-U.S. tensions with the closing of embassies. The U.S. recognizing we're doing spying and data collection for not just espionage of the U.S. government, but also businesses. I mean, really about, you're hearing it daily, viruses being stolen online, blah, 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 as far as vaccine research and things like that. So it's a real issue, and I think there's a lot of combat, so defensive play in gold. From an intraday standpoint, so we started off that peak, we had a nice little dip down. I posted about the buy that I took from this setup going forward there, and it continued on pretty well, and then we ended up with the softening DOC spread. It had a full steel reset, but then it caved a little bit further as we got closer along here, and that was a signal that we had a little bit deeper drop. As we came across, we ended up with steel still maintaining itself with the green having risen above on the slight decline. It was just a matter of waiting for turnaround of the Azure line right here, and then of course the dip. I just marked it there so you'd be able to see the line, the actual bar clear, and that led to a nice little pop. Again, same situation with DOC spread, and then declining, and then the turnaround again right at the end, and that led to a move that took us right back up to the highs, and pretty much we've continued that in the post market, in a little bit of a soft period right now, but full steel resets. So I would expect that we're probably going to revisit those highs. Made some new positive extremes. Starting right there is pretty close to that 61 level, at 66. It's certainly reasonable to add even right up here at the secondary one, which would be right around 73-ish range. It's a little bit higher than that, maybe 74 is going to be a little bit more active as we've seen a couple more positive extremes pop in. But all in all, good stuff. But you can see those ranges, I mean, between the 32.61 and 44. I mean, it's almost 20 points there, and we've been easily seeing that all the way through. So I would expect more of the same within that broad kind of move, because as we continue to push, like I said, you just need a little bit of short cover and then a baseline at a higher algo level, and you rinse and repeat, and they can keep doing this until we get to that 4,000 ES. And it's just a matter of if Congress passes a new stimulus and those things start to move forward, that will even add to the potential move. So that's the long and the short of it for now. As always, though, I'll put anything relatively interesting up on the Skype chat. Trade well.